Hey guys, DJ Wonder Chrissy, and I wanted to show you the G flooring. We got it installed today all the way. Got maybe some trimming to do and maybe a little cleanup, but we're gonna let it settle a little bit and then do a final trim job. But this is what it looks like. Looks nice. A lot of work. Was a lot of work. Had the products, about $1,000 worth of products, and got the new ramps over there too from Vivor, Amazon. Real nice for moving the mower and the snow blower up and down. So this is it. This is the new and improved floor for the Land Cruisers, folks. Hey guys, DJ Wonder Chrissy. It's Thursday. We're heading to the weekends, and I wanted to do a quick video about check your investments. Although I'm not, just to be clear here, I'm not giving investment advice, but I kind of have a story I wanted to relay about the importance of knowing what you have in investments and why. So, got a text message from a friend asking me to check out a bond fund, right? And first thing that came to mind was, oh, I hope this bond fund doesn't have oodles and oodles of commercial back mortgages. So I went over to my trusty computer and put the symbol in and started doing some deep dive into the data, and was surprised to find out that this bond fund, which it's a Vanguard fund, so it's usually a pretty good quality company with quality funds, and this was an intermediate bond fund shooting for like an average of 6 years. Of course, I don't have any bond funds at this time, really, so I was shocked to see the return on this for the last couple of years. The last 2 years were negative 13.16 and a negative 1.67. It's been creamed. The 5-year average of returns is 0.09. I mean, it's non-existent. So basically, when I looked into this, it had like 60% was government treasury bonds. And also some other what they call government agency bonds. So I think it had some mortgage-backed securities in there, but the commercial-backed mortgages was like 1.9%. So just goes to show you, my God, this person's lost in the last 2 years almost 15% on a bond fund, which is egregious. You know, I told the person, hey, if it was me, I would be routing this money out of there right away and heading to CD, right? You know, I'm an advocate of CDs, partly because I'm retired now, and I really scared by the stock market. The stuff I do have is quality stuff, and it has some bad months and weeks and can get creamed once in a while. And, you know, there's some holdings I have for like the last 2 years, and they've been beaten down so severely. You know, if I needed cash right away, I would be in sorry shape with some of these funds. So, and stocks, I got some stocks, but, you know, word to the wise, look at what you got. Look at what it's returning, and if it's not meeting your expectations, start plotting another course, folks, because I think a lot of people got lulled into the old, you know, I got a bond fund, I got some fixed assets, I got a medium and a large cap, and it was on autopilot for many years while interest rates were pretty much, you know, zero, right, or close to it. But the last 2 years, interest rates has risen, folks. You got to remember, as interest rates rise, the value of the bond goes down, and that includes T-bills and everything else. So some of these mutual funds are probably taking it on the chin. I mean, obviously. I mean, last year this fund had a negative 13%, and it's already down maybe 3% this year. So it's supposed to be a stable fund, right? Bond funds were supposed to be stable. No, not in an environment when interest rates are going up, folks. So that's the message that I want to send today is look at what you have your investments in. Even if you're investing through your work or whatever, check out those bond funds, because they've probably been battered the last couple of years, and it's not going to get any better anytime soon. So word to the wise, check your investments, see what they're doing, see what they have done, and take appropriate action. And if you really need help, reach out to a financial advisor. I know several years ago, me and the wife hired a financial advisor, and actually got a discount on some work through Charles Schwab, and it was a good experience. It was a very good experience, but we used it as a time to learn. I know some people like to go to a financial advisor and just push it all on them and say, here, you tell me what to do. But we used it as a chance to learn. So we met with our advisor quarterly for probably 2 to 3 years, and let him make recommendations, and then we helped implement those recommendations, and it worked out really well. But what really made the whole process great was we learned along the way. We asked the question on why he was doing that. He had a methodology. We learned the methodology. We learned why he was recommending what he was, and we saw it in action. So it was a very good learning experience for me. So now I'm at the point, and even Susie-Q, she's at the point where she could probably manage her own finances in an above average type of scenario than the normal person, and do it in a somewhat competent level. So I strongly advise, or I'm not advising, but I strongly recommend using a financial advisor if you can afford it, and if you can get a decent deal. Just be careful, because you want to go with someone that's reputable. You want to go with someone that's not going to lead you down the wrong path. There's a lot of advising companies out there, and some of them will get you into loaded funds. And I would stay with the large brokerage companies, the Vanguard, the Schwabs, the Fidelity type of places, before I got into some of these other ones where they're doing things a little bit different, and they can probably get you into more trouble. But that's what I have to say for today. I hope you guys are doing well. I hope you're riding out the stock market right now, because I don't know. The third or fourth quarter of the year is when a lot of government statistics come out on a yearly basis. So we're going to see a lot of movement in the stock market in the next next 3 months here. So mark my words, it's going to be a barn burner to the end of the year, either upside or downside. It's not going to be just a normal easy as you go type of year. I really don't think so. I think that we're in store for some massive fluctuations coming up, folks, and you need to understand what you have in your portfolio and why. I also highly recommend having that knowledge, because if you don't know what you got and you don't know why you got it, you don't know when to get rid of it. And sometimes, like this bond fund that my friend had here, its time has come and gone. It was It was a great fund when interest rates were very, very low and stable, but in an environment where interest rates are going up, it severely tanked. I mean, when you can lose over 2 years 15% on a bond fund, it's gotta hurt just a little bit. Gotta say ouch. So that's all I have for today. It's kind of an overcast fall day. The leaves are starting to fall on a couple of trees around here, and we've finished up with some of the G flooring in the garage. I showed you some of that at the start, so check that out. And if you have any questions, comment below. Over and out, DJ Wonder Chrissy.